13%. That's the daily jump we saw in some emerging market ETFs last week, quietly signaling a massive shift. While global markets are still riding waves, Vietnam's government is actively cementing a rock-solid foundation, directly impacting your next big move as an entrepreneur. Today, August 16, 2026, new directives from the Prime Minister highlight a focused push to secure the nation's financial future, opening doors for savvy investors and side hustlers who know where to look. This isn't just news, it's a blueprint for profit. The Prime Minister's initiative aims to increase foreign investment in key sectors such as technology and renewable energy, with a target of $10 billion by the end of 2027, as revealed in a recent government report. Here's the setup. Just 3 days ago, on August 13, 2026, Prime Minister Lê Minh Hoong chaired a critical meeting with the State Bank of Vietnam and key credit institutions. This wasn't just another bureaucratic talk. It was a direct, strategic response to the rapidly evolving, complex, and unpredictable global landscape that's been shaking economies worldwide. The core agenda? Protecting Vietnam's macroeconomic stability, especially against inflation, unpredictable currency fluctuations, interest rate pressures, and liquidity challenges. Their goal is clear: create a rock-solid, predictable foundation for businesses and investments, even when external forces are chaotic. What's the proof this isn't just talk? The government's official announcement, issued just yesterday, August 15th, details concrete results. First, they've effectively steered monetary policy, working hand-in-hand with fiscal strategies to ensure macroeconomic stability and a strong Vietnamese dong. Second, the foreign exchange market is operating smoothly, guaranteeing all legitimate forex needs for businesses are met without friction. This isn't theoretical. It means predictable costs for importing goods for your Amazon FBA store or managing international payments for your SaaS. Furthermore, the state bank is actively refining banking regulations, clearing bottlenecks that previously hindered market development and crucial economic activities. This commitment to a clear, stable operational environment is precisely what attracts serious capital and fosters new ventures, from Shopify dropshippers to local tech startups. Here's the critical insight most people miss. This governmental focus on stability isn't just for state-owned enterprises or massive foreign direct investments. This kind of predictable, well-managed economic environment is gold for agile entrepreneurs. When the dung is stable, your import costs are predictable. When forex markets are smooth, your international payments for a freelancing gig or a subscription newsletter become frictionless. This stability drastically lowers the risk profile for businesses looking to either source from or sell into Vietnam, and it directly supports the growth of important economic sectors. Smart money is already eyeing this. So, what's your move? Start researching Vietnamese e-commerce platforms like Tiki or Shopee Vietnam. Look for niche product gaps you can fill, leveraging stable import costs, or explore local digital service partnerships. Understanding how a stable financial backbone supports growth is your next competitive edge. Hit subscribe for more actionable insights. Leading market analysts, those watching emerging economies closely, are now dissecting the implications of the Prime Minister's firm stance on financial stability. They see this direct engagement between the government, the state bank, and credit institutions as a powerful signal for investors seeking clear policy direction. Many financial commentators on Bloomberg and WSJ are highlighting how such high-level meetings can reduce perceived risk, making local assets more attractive. This isn't just about big banks. It means smarter money starts looking for more reliable, long-term opportunities in sectors that benefit from improved capital access. For you, it's about spotting where that capital will flow next, often into the foundational services that support a growing economy. Think essential infrastructure or tech adoption, not speculative plays. Other emerging markets are watching closely, gauging the effectiveness of these stability measures. A strong, stable financial sector in one key economy can create a ripple effect, drawing capital that might otherwise sit on the sidelines or flow to less predictable regions. Global fund managers, especially those focused on Southeast Asia, are already re-evaluating their portfolio allocations. When a significant player like this commits to stability, it often signals a safer environment for cross-border transactions and long-term foreign direct investment. Savvy entrepreneurs can leverage this by identifying international payment gateways, exploring export opportunities for their Shopify stores, or even setting up remote teams to tap into a newly confident consumer base. History offers clear parallels. Similar high-level interventions to shore up financial systems often precede periods of sustained economic expansion. Consider the post-dot-com bubble era, where targeted efforts by central banks and governments rebuilt investor trust, paving the way for a decade of tech and services growth. The key takeaway from these historical moments is that businesses focusing on essential services, digital infrastructure, or scalable SaaS solutions were the first to capitalize. They weren't chasing the next hype cycle. They were building the backbone for the next wave of reliable economic activity. This disciplined approach is what turns market stability into personal wealth. Financial stability creates clear winners. Local small and medium-sized businesses gain better access to credit, facilitating expansion and innovation. Consumers benefit from more predictable lending rates for mortgages and personal loans, boosting purchasing power. Surprisingly, the losers aren't always who you'd expect. Highly speculative ventures, or those built on arbitrage in volatile markets, often find their edge diminished as predictability takes over. Smart money, however, shifts from short-term plays to long-term asset building. For anyone running an Amazon FBA business or a local service, this means lower borrowing costs and a more confident customer base are on the horizon, creating a more fertile ground for consistent growth.